All right, you guys. So this week we are going to take a little bit of a different route at looking at things. We're going to be looking at trader psychology. And I have a lot of different topics this week that we're going to be covering. So, in the past, what we've done is we focused on like one setup or one tool or one thing every single week. So this week, basically every day is going to be a little bit different, but it all is going to have to do with psychology and how our emotions impact our trading, different triggers for success or denial of success. And my emojis here represent basically a sliding scale that all of you guys are very familiar with as traders, I am sure. So we go from super sad, super happy, neutral, we are up and down pretty much every day. Over time, of course, the goal is to keep in that neutral zone as much as possible. The thing that we're going to start with today is actually going to be one that a lot of you have seen from me over and over again. We're going to start with a trading journal. So that is going to be today's session. And then we're going to be dealing with more of the pure emotional aspects. Why am I starting with a trading journal, you guys? I want to ask you that question first. Who can tell me why? You don't know where you have been. If you don't know where you have been, it's hard to know where you need to go, because without it, there can be no recognition of progress or lack thereof. Learn from yourself, manage emotions. Do. I don't know what that's supposed to mean, Scott. Understand what is working and what is not working. Yeah, I mean, all of these are good. So the really important reason that I focus so much on you guys keeping a trading journal is so much of our trading is emotional. And in order to get past those emotions, a lot of times what that means is building your confidence. So I know a lot of you guys know Linda Rashke. The last time we spoke, we were talking about trader psychology. And she had said how she'd been talking to one of like the foremost trader psychologists in our industry. And she had said to Linda that she didn't think that traders had a really good chance of overcoming their emotional aspects of trading. And I was like, what? That just struck me as like the oddest thing that a psychologist for traders would say. Because, hey, you're there to help them overcome their emotional aspects of trading. But the reason is, in my opinion, the reason that she said this is because a lot of traders, they think that, maybe some more yoga is going to help. Maybe some more meditation is going to help. But if you're not looking at what the specific triggers are in your trading, how can you really get a handle on the emotions at those points? How can you build your confidence of pattern recognition and trade management if you have no idea what you did in the past? And how many of you guys have a photographic memory? Anyone? Nobody's raising their hands. Jerry. I have a bad memory, you guys. My memory is awful. Exactly. There's no way for most of us can remember everything about the past, let alone every single trade we took, where we've been in them before, what led us to do what we did when we did it, let alone why. So this is why when I'm working with traders individually, one of the very first things that I want anybody to do is to start keeping a journal of their trades. Because once you can see where your strengths are and where your weaknesses are, you can start to get a better handle on the areas that you really need to improve. So we're going to start by doing a walkthrough on what I think your journal should look like. And it doesn't have to be anything that's extremely tricky or extremely time consuming. And another thing, especially for those that are coming from I get a lot of traders that come from different schools of training when it comes to, technical analysis and trading strategies and things like that. And we all have our strengths and our weaknesses. So instead of, me saying, hey, you know what, just outright take everything that I'm teaching you and go out and apply it. I always want to see where their strengths are first. And that allows me to put things into a language that is accessible to them. So they might be seeing different levels of support and resistance really well. And I can help explain, why certain levels are stronger than others, why it's the same type of levels that I look at, or why certain levels just don't work as well. But I can't do that without knowing where you're coming from in the first place. So everybody has strengths and weaknesses in their trading. Everybody sees things, certain times that others don't. And in order to build confidence in how you're progressing and what you do see, it's really important that you keep a visual of past trades. Because you can go back and see where your account was 6 months ago, but can you go back and see what your trades were 6 months ago and do so very, very quickly? Probably not. So let's start there, and then we're going to get into other things, such as getting into patterns of overtrading and getting into why we make the exact same mistakes over and over again, getting into how our environment impacts our trading and things that we can do to try to get past that. All of us, well, okay, all of us that have kids or other, folks that are in our space now, especially with COVID, we understand probably more than anybody else exactly how distracting outside things can be when it comes to trading. And, there's a lot of things that we can do to try and improve upon that. There's sometimes that we can't. We have to decide what are we going to sacrifice, where are we going to make changes, things like that. So that's part of the things we can talk about. Also, I want to ask you guys, what specific things dealing with psychology do you guys want to talk about this week? What do you find are patterns in your own trading that are happening to you? I know a big one for a lot of traders is they will slowly grow their account and then bam, give back all of their gains in a day or two. Happen to anybody here? Yep, everybody pretty much. Repeatedly. Yep, 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 yep. If it has not happened to you at some point in the past, you're an outlier. Let's just put it that way. Because that is like the biggest thing that has happened to pretty much every trader that I talk with. Now, the nice thing is a lot of you guys are also saying not anymore, or in the past, or I used to. And I notice a lot of you are folks that have been here for a while. Oh my gosh, Harvey. There's a phrase for you. Eat like a bird, shit like an elephant. Oops, I shouldn't have read that out loud. Oh well, he's not paying attention. Meow. Okay. Anyways, yeah. So, we're going to talk about that too. And those of you that have spoken up and that has said, how that happened to you in the past and it's not happening in the more anymore, we would love to hear from you throughout this week too. So, I love to hear some of your guys' stories or things that have worked for you in the past, also things that haven't worked for you in the past. So, without further ado, let's go dive into our very first topic of the week, and that is keeping a trading journal. So I'm going to flip on over here, and we are going to pull up and make believe we've got a trade this morning. We can use somebody's trades, or I can just pull up one of mine, but we'll just pull this up here. Actually, you know what, Jerry, I'm going to volunteer your trade this morning. So Jerry posted his Phoenix for the group this morning. And I'll show you guys what this was. This was a beautiful setup over here. I'm going to clear these. So what we have here is this nice little Phoenix coming off of the lows this morning, right out of the open, about 10 minutes or so into the day. And this is a 200 tick chart. So what we do is that we're going to go and grab this chart. All right. Now I'm going to make a little kind of, oh, the word is escaping me. Guide. I can't think of the word I'm trying to think of, but a guide up here as to what we are looking at for, what does each thing mean. So green, key, thank you. Legend. Legend is the one I was looking for. Thank you. So what we have here is our little legend up here, or our key, whatever you want to use. And each of these is going to represent something. So a green circle for me equals a buy. So that's going to be my buy. I'm going to do this here. And then we're going to do a sell. We're going to do a cover. We're going to do missed buy, missed sell, hypothetical, larger, exit. And so these are going to be some of the things. And then we've got stop. I'm going to put that in there too. Stop. So cover with profits. Profits. I sliced the end of my index finger, so my typing is a little not so hot right now. Okay, so we're going to use this here. And we've got the buy, we've got our sell. And just use this as like a common template so that you're using basically the same colors every single time. I use these. Missed buy, I usually do this in like a lighter green. Missed sell, I'll do that in a lighter red. And then hypothetical larger target. You can do that in purple or light blue, one or the other. So what this does is it gives you just a basic guide of where you can start from. And these are the only things you really need to have on your charts, absolutely. I do recommend that you put your stop levels on there too. And you can use things like this to help you mark where your target zones are going to be. So this would be target zone, and then you can use just a simple line here for your stops. So this is basically all you need to have on your charts. You don't need to make them too fancy. And so we've got a Phoenix entry here. Stop typically on a Phoenix is going to be under that low. So you can use that. And then what we can do is we can go and put in, where our target zones might be. Oops, removed him. So what levels of support or resistance might you be looking at? You can add things like your measured moves on here too. You can add your fib fans on there, whatever you might be using to help you out. Those are the basic things you want on your chart, but you don't have to put a lot on here. In fact, a lot of times I don't add any extra writing. I'll put them on there for you so that you guys understand, but when I print it out, I'll go back and do a lot more writing on charts at that point. But I don't necessarily on the entries. One of the things you can do though is, for example, here, let's say you've got 3 contracts. So you could say you're in 3, and then maybe you take off 1 here. So maybe we go and take off 1 at the resistance here. So then you could add -1. And maybe you add back in again. Then you can add +1. Or you could also write it in like thirds, like you could say at 1/3, add at 1/3, things like that too. Anything that kind of helps keep an eye on, how much you're adding, where you're taking things off, percentages, that's going to help you out. Not necessarily so much like at your very first stages, but when you go into doing more advanced trade management and building position size and working entry orders and exit orders at different levels of support and resistance, that becomes more important. So we have this as just like our really basic thing here. So this is just let's see, this was our 200 tick chart here. So I'm going to actually go and oops, put this here. And I'm just going to erase some of this stuff here. So this can be our really basic beginner. And now what we want to do is make this bigger. So what I have to do now at this point is that I need to go and I need to grab what is going on the larger time frames. So this is my 200 tick. So let's go up here and look at a bigger time frame. I'm going to add more days. Use this 8,000 tick here. Now what I'm going to do is I'm going to grab this one. I'll copy it, and I'm going to paste it here. And I'm going to flatten these, go back up, and then I'm going to mark on here where that entry was. Now here's the thing, if you take like multiple entries and multiple exits, if you circle every single one, it's going to be a crazy mess as you're adding size. So what you want to do is you want to mark like your main zones of where you're building. and where you're exiting when it comes to the larger time frames. Because all you want to do is you want to glance at that larger chart and know where your trade is in that bigger picture. The biggest thing traders do with their journals is they do not put that larger time frame chart into their journal. They just keep that smaller time frame chart. And we actually had a really just good discussion this morning with Victoria in the forum. She had asked about a 2T setup. And Harvey and I were like, well, that's not really a 2T. And the reason was because of the trend placement in the larger trend was not a good spot whatsoever for a 2T because it had this rounding low. It was coming off of where it only had one main swing on the upside. So there was no larger trend exhaustion to bring in the selling. And I'll show that to you guys here in a minute. But it's a really good example. One question, why don't I write text on my journals, my entries? Is it not important to proactive or reactive? Yes. So that is another thing that we've talked about in the past with journaling. You can write, is your entry or exit a proactive or a reactive entry or exit? Proactive would mean you got basically an order on the books for the most part. So maybe you have a target level and you've got an order on the books at that target level. Reactive would mean you're using something like a channel break. So for example, here the entry would be reactive because it's a channel break entry. That first part off would be proactive because you're getting out as it's coming into that zone of resistance there. The add would be reactive, reacting to the channel break. Proactive would be if you were buying it within that range. Now you could have something that is a bit of both because you might have a smaller time frame setup that is a buy where you're reactive to a smaller channel break, but it's still proactive for the bigger break. So I would still consider it to be a proactive entry, even if the smaller time frame entry is actually reactive, or yeah, reactive. So two types of entries, and you can write P or R next to them. The main thing you want to do is you want to get to a point where most of your executions are proactive. And when it is reactive, it's not an emotional reactive. So P proactive, R reactive, E emotional. So that's going to help you too when you go back and you're journaling. So like, let's say here, for example, I went and I bailed part of the position right here. I might go back and say, oh, I did it because it was a prior high here. But if I really look at things, closely, is that really why I got out? Or did I get out because I didn't want to give back the gains that I had? And so you got to think about that too when you're doing your journal. So proactive, Alan wants me to go elaborate a little bit more. So this is another thing you can add to your journals. You don't have to, but it's going to be helpful if you do it. Basically, proactive means that you're building into position. So for example, maybe you are looking at this as a reversal. You're expecting it a reversal. So you're buying some down here, even though the channel for the larger thing hasn't broken yet. So you don't have a bigger confirmation that it's really going to turn around, but maybe you're buying a double tap of a previous low. So this could be, you were looking for that as like a 2B type of formation, and you bought it when it retapped that low. That's a proactive entry. If you're buying the pullback in here, like a 0.4 on a mega phoenix, you could consider that to be a proactive entry because the whole channel hasn't broken yet. You don't have like a confirmation yet. So once it confirms and you're taking an entry, that would be a reactive entry. So like if you're taking an exit that's based upon a channel break, that would be a reactive exit. And again, you can have combinations of both, but think of what it means on the larger time frame. And that's going to help you decide what to label it. And just be consistent in how you try to label something, because that's the main thing that you need when you're going back and studying your stuff, is that consistency. So again, emotional, make sure you add emotional on there. So you can always give some sort of reason behind a lot of emotional exits. You could say, oh, it was a prior high, or there was whole number resistance, or there was a moving average there. A lot of people find reasons to put onto something. But if you really go back and think about it in terms of like what I've taught you over time, what were you feeling when you got out at that spot? What were you feeling when you added or bought something at that spot? So there can be combinations of emotional and proactive, emotional and reactive, but at the same time, keep it consistent and just work to recognize that. So once we have this larger time frame on here, what this can also do is it can help us recognize situations where we should have held for more. So one of the things that I posted earlier was, let me grab it. I went and did a little ditty here where I grabbed all of these main impulse waves and I went and put them over there. And you can go and add all the smaller ones too. So I did the larger ones because we were already coming up at that level, but if I was just getting into a trade, you could also go and grab, let me do that here, the smaller ones too. So like these smaller ones, and then just go and stick those on here too. Whoops, that one went a little crazy, didn't he? And what that's going to do is it's going to give you an idea of kind of like, where your minimum is that you can expect on a trade. So when you have a lot of things that are about the same size, like these that are just like the counter trend moves, it gives you an idea of what you can expect as like those key target levels. So if I then go and take this and post this onto my journal, this is something where we can make the journal a little bit more expansive. And I can go and make it smaller here. But then it tells me, how far did this actually end up going? How much of it did I get out of it? If I'm out of the trade right here on my bigger time frame, and I go and I look at all of these other things, it tells me, you know what? This is really a phoenix in this bigger span of things. It's that first pullback after this is rounded off at the lows here. If I see over and over again that these are able to make it to some of those, at least those early impulse exhaustion moves, it can give me confidence the next time around to hold more to try to get to those larger levels. Now, the key with this, though, is that the image that I have right here, this was taken earlier this morning. So what I want to do is I want to go back at the end of the day and grab a screenshot of something like this too. I might have like an original screenshot like this, but then I'll go and post an updated one. So maybe here's my original, and then I'll post like the updated one down here underneath it to see where did it really play out. Did it make it to the larger target levels up here where some of those bigger impulse waves went to, or did it hold in the smaller ones? And over time, you're going to start to see patterns. You're going to see, hey, when this phoenix is by itself on a smaller time frame and doesn't really have a good level of support or a good setup on a bigger time frame, it only goes for the shorter impulse waves. When it's also at the lower end and starting a bigger phoenix, it can go for much, much more. And sometimes something like this could even end up going like that. It might just come back into the range here and then kick off again once it does that same amount of time development. And time development is another thing that you can put on your charts. So a lot of times I do this after I print things out just because it's faster for me, but you can do it in here too. So you can go and copy and paste. And so that can give you an idea of, hey, you know what? This went to here and then it took off again. So I might have bought the Phoenix here thinking, ooh, that's going to just keep going. And it doesn't. And then, maybe I scratched and I got out of part of it over here, only to see it then go again. That's going to help me recognize, oh, it was because it went when it was only about half the amount of time as a lot of these other zones of congestion. So when it tries to go at the halfway point, it might do a false break and then go again later. So I'm going to have to make sure that I post a chart that takes place after the fact too. And maybe you do that the next day. Maybe you go back and here's all my trades for one day. I go back to those trades the next day and then add on that bigger time frame chart to show me where things went. This is especially going to be the case for those of you that are doing swing traders. You might need to go back a week later and then put the outcome on your older journal pages. But then what this does is this just creates one single page, and then I can go and I can just print out this entire page. Now here's the key thing at this point though. I need to label this pattern. What is this trade going to fall under? So I would put this trade in my Phoenix category. And so what I'm doing is I'm printing out all my charts, and you can do these as folders on your computer too. You can create folders for all your Phoenixes, folders for all your avalanches. And then within those folders, you can create subcategories. So you can say Mega Phoenix, Mega Avalanche, Shallow Phoenix, Shallow Avalanche, Tilted Phoenix, Tilted Avalanche. So you've got a lot of different things that you can go back and further divide them. You can say failed Phoenix, failed Avalanche. And then what you want to do is take each of those smaller categories and study those and look over those and look for things that you've done over and over again. Look for things that, where could you have put a better entry on these? And one nice thing is if you print them out, a lot of times what you can do is you can go and totally like cover part of your screen and then kind of scroll it over bar by bar as it unfolds, so that you're basically watching it as it unfolds bar by bar. It's not the same thing as watching it as like a replay on NinjaTrader or something like that. But if you're going back and looking at something like 6 months ago, then that can really be helpful. So I recommend printing it out, putting them in notebooks, three ring binders, putting tabs in that notebook so that you've got it separated. And what this can also allow you to do is that you can go back and maybe you take a couple of hours on the weekend. You can spread out everything that was an avalanche. You can put all of your things that were winners that went substantially further than you were anticipating together. And you can look at all of those together and look for things that might have stood out that told me, hey, you know what? If XYZ happens before I get a Phoenix, that Phoenix is going to be much stronger. If XYZ happens before I get a Phoenix maybe my Phoenix isn't going to work. So let's take a look at the potential 2T that we were talking about in the forum here. So if we scroll up here, the question was, and I'm going to go all the way back up, should we count this as a failed 2T? Now, a lot of you guys in here have been here for a while, and you're thinking, oh, well, this is actually a Phoenix right there, because it is a Phoenix. But you know what? This part, if we are just looking at this part, when it comes up to here, that's really similar to what we would expect for a 2T, right? Your 2T pattern is a move like that. And you would look for a short here. So why isn't this a 2T? Well, if you're putting all of your 2Ts together and you're seeing that a lot of them are failing and not working, you need to figure out what do those that fail have in common. So when I go and I look at something like this chart here, this is where, 2T would have happened. We're just looking at this just by itself. So with this, if we scroll on over here, look at the trend placement. So right here is where you're looking at for that potential 2T. Well, it's rounding. The momentum is shifting. There's only been one upside move here. And these are things that newer traders won't see because they'll just be looking only for the 2T. So the trend placement, very, very important. So for example, here, if this had gone to a slightly higher high, that could have easily been a 2T because this is a substantial uptrend over here. It's been in place for days before it went into that high. So that made that a good zone for a 2T. And it came close, but it wasn't technically one because it didn't do the higher high to create the trap. But if you look at this here, right here would be where that 2T or possibility or something that might have caught your eye as a 2T was trying to form. So you can see where that is in the context of the bigger picture. And that can help you out. You won't necessarily see it on your first trades, but when you go back over time and you incorporate more of the stuff that I'm teaching you guys, then things like that are going to start to stand out as to why something failed. Here's another reason. So this pulled back almost to this breakout zone here. In a typical 2T, that's not going to happen. It's not going to pull back that far. What that does is it widens this up here. So you've got a big chubby trend channel. The chubbier trend channels can have a harder time reversing, especially if it is not at a major resistance level on a larger time frame. So what it does is it makes it so that the distance between the highs here, from this first high to the second high to where it tries to break out, it's about the same. So you'll notice that when this confirms, the time difference between those is about the same. That's actually the time difference you want to look for a really strong Phoenix. Typical 2T is going to break out sooner. It's going to give that false earlier break. It'll go for a measured move here to here as a general guide, and then it's going to try to correct. Now, even if this did this, because of that bigger time frame, it could have still been a false breakout and gone like that. So it still might have broken out early, pulled back into the range, went for that longer base, and then broke because of the larger trend placement. The larger trend placement is the number one reason that 2Ts and 2Bs that people will think are 2Ts and 2Bs fail because the placement is not there for it. And actually, we kind of just had that same thing happening right now on the micro. Let me go over to the live chart. So see this here? This is about halfway up, coming back up to, this drop, if I go over here to let's see, a 30-second, we can see it on 10-second. You've got, get my pen. You've got this trying to do a 2T type of formation here. Now it's tilted a little bit to the upside, but we don't have an extreme drop in volume here. So you've got the pop up, we kind of got the shift here, so the overall channel is shifting. So the traits that are good is that when we're looking at distance, the distance is smaller, the shifting momentum is pulling up there. So this would be what a typical 2T might look like if this is at a larger trend. I usually call this a hybrid. It's kind of halfway between a momentum reversal and a 2T. Now, it still made it close to the T3 target, but it didn't quite get there. And the reason is because this is at a midway point in the bigger pullback. So because this pulled back here, and then it's trying to do it right here, it's a higher risk zone. Now a pro is that it had the previous low over here. So that's a resistance level. And this resistance level is actually even stronger right here. A lot of times if we have a two-wave move in here and you're looking at a previous low as support or resistance, I go for the one that's higher. That was also the reason for the reversal earlier around 1150. Let me show you that. See this high and this high? I didn't use this high for my support. I used this one. And it actually hit it to the tick. So when you have two highs like this in a range, use the one that is a bit lower. It's better. I got a lot of whys. Why? I don't know why. It just works better. No, it's probably because a lot of people are already kind of looking at that as a level, or sorry, this one as a level. Maybe it's just more popular. I don't know. So maybe they're going to try to wipe out people's stops. I have no idea why it happens, but yeah, run stops. That's basically exactly what Scott said there too, just now. So, I mean, that could be why, but that's what I find. So like if I have this low and then I've got one that's slightly higher because that's the congestion, I'm going to use the one that's slightly higher 90% of the time. It's going to be better if I'm looking for pivot trades. And it literally hit this within like a tick, I swear. On both the NQ and the MNQ. I originally had my MNQ hooked at the wrong spot because I didn't see there was a little tail. But they were exactly at the same. But these are things you guys are going to notice only by keeping a trading journal. So you might have consistently, like maybe you're short here, right? Maybe you're consistently aiming for this high as your target. And then you're seeing over and over and over again that it's really going to the next one most of the time. That's how I learned this stuff, by going back and studying my journals and seeing, hey, in which situations did it actually get more than I was expecting? And what could be happening over and over back here that could be driving that? I wouldn't know this stuff if I didn't do a journal, because unless I have totally photographic memory, which I actually have like practically the opposite of, I would not be able to recognize that. So do you guys have any questions here on your journals? And I know some of you are going to say, but I take so many trades. There's no way I can do that. I would say stop taking so many trades until you have a system down. And like I said, it's not every execution. So like down in here, I didn't have just one entry there. I had several. So what I do is circle the zone on my chart. I don't have like every little dot of an execution on my chart. I circle the zone unless it was something really important, like maybe I made a really big mistake. Then I want to look at exactly that spot, and I'm going to do a smaller time frame of grabbing that too. Journaling is so hard, you guys. I don't beat yourself too much if you haven't been doing it. It's getting into the habit, and everybody says it takes 20 days for a new habit. It takes 60 days for a new habit. I don't know exactly how many days. Everybody's going to be a little bit different. But the fact is, you just have to start to do it. For me, habits tend to be closer to 60 days to sink in. What's the opposite of a photographic memory? That would be me reading that line and then 2 minutes later not remembering that you wrote that, Quran. Uh, I do that sometimes with text messages, especially if I am in the middle of something else. There's a running joke in my house. My husband will just disappear for a few days. I'll call him up, be like, "Where are you? Shouldn't you be home by now?" He's like, "I'm in Detroit. You've I've told you this like 20 times." I feel like, "What?" I said goodbye this morning. What? Yeah. I'm just blaming it on my CSF leak because that does impact short-term memory stuff, but who knows? It could just be happening to lots of people getting older, but it's really bad, you guys. So seriously, if you message me something and it looks like maybe I saw it, but I didn't respond, please just message me again. I will not intentionally ignore anybody. Well, except maybe Carl. No, not intentionally. So just seriously, just remind me. Donna says you did that once and your husband was in Europe. Nice. Any tips on journal organization? Yes. I mean, so 3-ring binders. And if your binders fill up, make a binder for each strategy. And if you're struggling to keep up with them because you're taking so many trades, you guys, focus on 1 to 2 setups, okay? Unless you are smashing it out of the ballpark, doing what you're doing, drop back on what you're taking so that you're focusing on only a couple of setups until you have mastered them. Because, hey, if you're smashing it out of the ballpark, why are you here anyway, right? Because I'm awesome company. I like that reason. I know some of you actually are profitable. You've just been hanging around for a long time and you won't go away. I'm kidding. I love having you around. Uh, I exactly, Donna. We never know it all. Nope. In fact, if you've ever met a know-it-all, just go away. Stay away from them. Actually means narcissist. All right, you guys. So Karan says, do I also create a subfolder of winners and losers? Yes. Yes. And you know what? You might not be able to subcategorize your journal to start with. It might just be throw everything you think is a phoenix or an avalanche into two folders. And then once you've compiled enough trades, you can go back and switch them up. And you know what? Sometimes I throw the same thing into multiple folders. So for example, I might have like a 2B that turns into a Phoenix. So I'm keeping a copy of that in both the 2B folder and the Phoenix folder. Do your main folder like your Phoenix or your Avalanche, and then do your subfolder. Right. So you might be like grabbing all your momentum reversals, and whoa, some of them are turning into momentum reversal pluses. Those might actually end up being failed momentum reversals. So if you're categorizing all of your momentum reversals together and you're finding a number of them are stopping you out, but then they're going later, those are momentum reversal pluses. So you're actually, by studying your losers, your momentum reversal losers, you're actually learning how to trade the momentum reversal plus. What pattern should you start with? Two T's, two B's, Phoenixes, Avalanches. Pick amongst those. Those are the ones to start with. Those are the ones everybody should be starting with, in my opinion. And you're basically going to learn every strategy by learning those strategies. So some of you might find you see the Phoenixes and Avalanches better. Some of you might find that you see two T's and two B's better. If you're not sure, sim trade them both until you are sure. And never just go into trading a new strategy off of live accounts. Use your sim account first, because you don't know which ones are going to be higher risk or lower risk, when to stay away. Like, why would a lot of our longer term traders never have tried a 2T there? Is wave counting important prior to seeing them? Absolutely. And you can add that in your journal too. So the goal is to start with a really simple journal, and then you can go back and add notes. You can go back and look for things that you're starting to see over and over again. And I recommend making sure you have a lot of space on the side of your printouts to make notes too. So like on here, make sure you've got room over here that you can jot things down. How do you add wave counting? Well, you could just go 1, 2, you just add like that, or stick a 1 and a 2 under here for like the pullback. I mean, your journals can become elaborate, but the problem with the really elaborate journals to begin with, you guys, is that you're not going to stick with it. I'm just going to be fully honest with you. I think maybe 1 out of 1,000 people might stick with it if you start really elaborate. It's better to go back and add notes to previous trades after you learn more. So it might even be good to, when you jot in your journals, that you use a pencil, because then you can go back and erase things that were mistaken conclusions, because you're going to make mistakes too when you're thinking about, hey, why did this work? Why didn't this work? All right, you guys. Wow, this went fast, huh? Listing entry, why is it, well, what is important to keep it simple? Because you just said listing entries is not enough. Right. So a lot of people, when they do a journal, what they'll do is they'll just print out like their broker statement, or they'll keep like a tally of, hey, I made 8 points today. I lost 7 points today. I made 21 points today. I lost 2 points today. And you know what? That's a great thing to keep a track of, but that's as your journal becomes more extensive, because what then you can do is you can say, oh, hey, this is Monday, this is Tuesday, this is Wednesday, this is Thursday. And then maybe on Friday you lose 30. Well, if you're consistently finding that every Friday you are having your biggest losses, you might want to avoid Fridays. And then you could start looking at Fridays and say, well, is it Friday mornings or Friday afternoons? Things like that. Those are other ways that you can go in and learn more about your trading. This is the simple way to start with. This is something you could do too. You could just put this in like its own little book. I would mark it by time. So like I would do mornings and afternoons, or um, maybe you could do like a plot chart. So let's say, let me make a screen here. So let's say that you got Monday, Tuesday, Wednesday, Thursday, etc. So maybe you have like 9, 10, 11, 12. So these are your hours. And then mark like here, green for a trade that you initiated at 9 o'clock that was a winner. Like, let me change my colors here. And maybe you find, hey, I had a winner here, 2 within this hour. And then maybe, whoops, sorry, I erased that. And then maybe like at the end of the day, you find that you've got more reds popping up. That's another thing you can do. So you can make it as just a plot chart there, where you're plotting like your times of the day that your best trades are initiated. That's another way of doing a journal where you've got a really good visual. It's going to help you recognize what times of the day that you should stay out of the market, what times of the day you're most likely to be the most profitable. So that is another very good type of journal to be doing, but it might not be something that you start with. It might be something that you add. So use one of them to start with, and then work on doing the other one, because they're each going to tell you two different things about yourself. All right, you guys. Okay, so we're going to wrap up here today, and we'll be diving into more psychology here throughout the week. So again, you have any specifics you want me to look at? Anything that you are finding you're running into over and over again? Let me know, and I'll help you figure out some of the ways that I have helped get traders through them, what has worked for me, and we can even have you guys chat a bit about things that helped you overcome some of your hurdles. So have a wonderful rest of the day, you guys. Make sure you are doing your journals, and I'll see you back here tomorrow.